From jewelry to investments, gold has always been a staple in India no matter the price. But with the recent rally in gold prices, the yellow metal is reaching a new all-time high. Investors are wondering what the future holds for gold. You have heard of gold being the ultimate hedge against inflation, a safe haven against macro risks like geopolitical tensions, recession, and global economic slowdown. But in 2022, gold didn't dance to this tune. The answer lies in the rise in interest rates globally. The US Federal Reserve and other central banks started aggressive rate hikes to control inflation at the start of 2022. The result was that the US dollar appreciated against most other currencies globally, making it the new safe haven asset. This led to gold losing its luster as a safe haven asset. Gold doesn't yield any recurring return, and rising interest rates made it less attractive as an investment. It's because the cost of investing in gold rises when interest rates go up, especially if you were earlier borrowing money at near zero interest rates and buying gold ETFs. But then, something interesting happened in the second half of 2022. The demand for gold from India and China started to rise. India is one of the largest buyers of gold in the world, and the festival and wedding seasons helped the prices of gold to rise steadily. Additionally, central banks globally, including China, Turkey, and Russia, started accumulating gold to diversify their foreign currency holdings. The sanctions imposed by superpowers such as the US and European countries pushed these nations to add more gold to their reserves. China is also working on crude oil settlement through yuan instead of the US dollar to weaken the US dollar's dominance. It has made the yuan convertible into gold at two Chinese exchanges to improve the acceptability of its currency in international trade. This is another reason for China to increase its gold reserves. All these factors have led to a sharp rise in gold prices towards the end of 2022 into 2023. In the last 3 months, gold prices have increased by over 20%. With the recent rise in gold prices, it's natural to consider adding it to your investment portfolio. However, it's important to remember the Fed's move to control inflation. The recent rate hike of 0.25% on February 1st is a clear indication that inflation is still a concern, and other central banks are likely to follow suit. While a bull run in gold prices can't be ruled out, investors should keep a close eye on monetary policy and be prepared for potential changes in the market. As always, it's crucial to diversify your investment portfolio and consult with a financial advisor before making any decisions.